Welcome back to the show. We got a great one lined up here, ladies and gentlemen. Take a look at it. Things are breaking. Brace for impact. We got so much more. Somebody wrote, if that isn't enough, somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show. You can follow us on X, YouTube, and DigPerspectives.com for exclusive content. Right now, $2.97 trillion market cap for crypto. The entire cryptocurrency market is off 7.5%. You are hearing and seeing that correctly, unfortunately. Bitcoin right now is now 84,100 plus. Remember when it was 120 some thousand? Somebody was calling for that. And everybody was in the market going, there's no way that could happen. Well, here we are today, ladies and gentlemen, 84,100 and 2,700 plus for Ethereum and $1.94 for XRP. And I have a problem here because Mrs. Backup is home right now recovering from a foot surgery. So I have to tell you, if I'm going to be buying the dip today, I'm going to have to be like very, very cloak and dagger about how I do it. I'm kidding. She'll hear. She can hear. Can you hear me right now? Okay, she can hear me right now. So I've basically broken her spirit. So there was a time when she would get upset, but at this point, she's like, "Oh God, the buying never stops, Bradley." So I could say to my sister-in-law and my brother-in-law that it's okay to tell. She already knows, right? Send it out love to everybody, no doubt about it. Not financial advice. I got to try to figure something out. One of my exchanges told me I can't buy unless I update my profile. So I got to get something figured out here and catch this dip. Ranging between 186 and 215. Got a shout out to my brother Chris, who gave me the heads up at $1.88 this morning. Yeah, apparently he's watched Band of Brothers. That's right. Caleb and Brown, ladies and gentlemen, the crypto brokerage. Listen, it's serious. All joking aside, hacks are at an all-time high. And this is just, it doesn't need to happen to you. Whether you're self-custodying or you're somewhere where you can't get customer service, whatever the case is, you can get all of it right here. And this is serious. And I do mean that. And I hope people are really, really listening. You go to XRPwealth589.com and sign up for your free account today and literally start getting the peace of mind and the sleep you deserve to get. The best night's sleep since you've been in crypto. Yeah, I know it sounds like a catchphrase. Sounds very cliche, right? You hear it, oh, yeah, I'm sure. Yeah, well, sign up with a free account and find out what we all already know. It's the truth. You're going to love the 24/7, 365 access to your prime broker, the free institutional grade custody. No more worrying if you've been hacked or if your transfer went through. These prime brokers will get on the phone with you or a Zoom call and walk you through your transfer to make sure it went from where you are to their platform correctly. Who in the hell else does that? The answer is no one. So make sure you give yourself what you deserve, which is the best service possible. Right here. Caleb and Brown, XRPwealth589.com. Sign up today. Paul Barron says, good morning. No margin. Repeat, no margin. If you're going to suffer a bloodbath in this market, you better not be on margin, right? That's the truth. And it is a bloodbath and has been since October 10th. We'll get into that more. Here's David Stravinsky. Hear what he says.
Because while many people are staring at the stock market, some of the biggest opportunities today are happening in hard assets and digital assets. So right now, crypto leverage has been wiped out over the last few months, completely washed out, in fact. We're at historic lows. And every time leverage resets like this, it creates the conditions for a powerful move higher.
There you go. There you go. Now let's listen to a more detailed reason why this is happening and why we're here. Digital Asset Investor highlights this clip and he says, Tom Lee usually bores me, but not here. I have to agree. It's a great clip to understand what is causing this crypto pullback. Never use leverage in crypto, at least not in this speculative market. Great buying opportunities for those of us who don't, not financial advice, sleepless nights for those that do. And that's the truth. And God bless everybody out here. I don't want to see anybody get wrecked. But if you're on margin and you're leveraging, I bet you're worried to death right now if you haven't already been hit with it. And I hope that doesn't happen.
I think the crypto market has been limping along since October 10th because on that date was a negative shock. I mean, today's stock market looks a lot like an echo of what happened October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading, and if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. So I kind of concur. I think crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity.
Well, that was the point that my very, very smart team behind me, we put together for the top of the show, which was showing that Bitcoin turned down today before the market did. All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on what, November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. It actually, stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out, as that spread across other exchanges, right? Because liquidations cascade. Almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Listen to this.
Well, Brian, I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stablecoin rather than rely on internal quotes. But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening.
There you go. Listen, the long and short of it here is for me is that people get over leveraged, and sometimes it's a company like a stablecoin company, and then they have to start selling off their reserves in other areas other than just treasuries. Like if they hold crypto and a range of basket of assets, they have to start liquidating to get right again. And whether it's a stablecoin company or some other company, it goes to the phrase when we always say liquidity begats liquidity, like the more liquidity comes onto the ledger, the more and more and more keeps coming on. Well, it's the same thing in reverse. Liquidation begats liquidation, especially in a decentralized protocol, right? Where something has not got an intermediary controlling it. That's some of the downfalls of being on a DeFi platform is that you've taken a line of margin and then you don't get to talk to anybody. You're out running errands and the market crashes and you just got liquidated. Nobody to talk to. Wasn't a broker that called you and said, hey, you need to refresh your account, put more reserves in or whatever. No, more collateral. That's what happens. And that is what has happened. Now, I think what is a good point is what Dave Stravinsky said, whether you have a clean out moment like this that really sets the stage for a really big move up because the market truly gets flushed out to a great degree. And then everybody needs to reboot basically from that new low, that new base. But then there is also this to take with it. MicroStrategy. We have talked about where they have been and how they've been upside down on their NAV and about how that is a problem. Well, Dom Kwok's been watching this closely and he says likely the MicroStrategy gets dropped from NASDAQ and the MSCI indices, leading to billion in outflows. Expect investors to front run this spiral of doom continues. Now, this is a guy, Dom is very versed in business valuations. He did valuations for Blackstone, and I believe it was either Goldman Sachs or JP Morgan or maybe all of them. I tell you, this guy is no stranger to this stuff. He's not shooting from the hip here. What he is seeing is problematic, right? So we'll see what comes of that. But MicroStrategy is having problems, and the market being in the situation that it is in is not helping out. Now, we know the Clarity Act is supposed to be coming. I've got it queued up right here.
Believe we can mark up in both committees and get this to the floor of the Senate early next year so that President Trump will sign the legislation making America the crypto capital of the world, protecting consumers while increasing the likelihood of America being the most dominant economic power for the next 100 years.
Yeah. There you have it right there. Shout out to Senator Tim Scott. Get it voted up, marked up for a floor vote by December, and then President Trump can sign it whenever he wants, early next year, however. But having that vote passed this year is really paramount for everything pertaining to the U.S. dollar dominance. 65 crypto firms have now urged President Trump for action. The 65 crypto organizations are calling on President Trump to bypass Congress and direct federal agencies to immediately clarify digital asset regulations. And I guess one of the ways that he could do this is he could do this by executive order and basically mirror the legislation that's in there until it's passed. But if we get it passed next month, what's the point? Right? So we'll see what happens here. Nonetheless, the pressure is on, and it means that the legislation's in a very good place for all of those private organizations to be urging the president to move forward to get this done. Meanwhile, looking more on a global level, because we're not just talking about the crypto markets having issues, right? It's the entire geopolitical economy. All around the world, there's problems, just like Japan. And we've been watching Japan very closely. We've done multiple segments and shows on the debasing of the US dollar and the Plaza Accords from 1985, which is the last time that happened. And then we could see a Mar-a-Lago Accords and another debasing of the US dollar because of things like what's happening right now in Japan. Japan says their stimulus package will have an overall economic impact of 265 billion. The Japanese yen just fell to its weakest level against the US dollar since January 25. Things are breaking, says Paul Baring. Brace for impact. And I think he's right here. Japan, fourth largest economy of the world, I believe it is. And we've got Dom Kwok here to break this down so you understand why it's so critical, because we know that a lot of people in the world, the reverse carry trade is a huge conversation here, right? There's a lot of people in the world that borrow Japanese yen and bonds over there at 0%. And then go put it to work for a small margin that they can make in other money markets. And then when there is a change in the Japanese yen and it goes up, it can crush that. So now if I go from paying 0 interest to 1 or 1.5%, 2%, now I'm not making any money and I have to unwind those trades. So that's what they refer to as the reverse carry trade. If that would happen in mass, you can imagine it looking something like what we've witnessed in the current crypto market. liquidation begets liquidation, right? So once one starts doing it, you start to see this really cascading effect take place, right? So as he says here, what's happening in Japan and why it's affecting our bags, too long didn't read. What happens in Japan doesn't stay in Japan. So what's going on here? Very quickly, Japan just approved a massive $135 billion stimulus package. And we know, but at over 240% of GDP with their debt rate now, Japan's debt threatens to trigger a global fiscal crisis, and markets are bracing for impact. But why is Japan so important? Well, Japan is the world's fourth largest economy, as we noted, and too much debt is deadly. Remember the good old days of 2008? Japan's debt is already twice the size of its economy, and investors are rightly worried about Japan's worsening fiscal condition. So Japan must soon choose whether to stabilize the yen or allow yields to rise, or to keep rates artificially low, devaluing the yen lower and lower. So why is all of this affecting U.S. stocks and crypto? When Japan government bonds volatility rises, global funding costs rise. Since companies are valued by discounting future flows by funding costs, the higher the funding costs, the lower a company's present value, and therefore the lower its stock price today. And since the tech and the crypto are correlated, both have dipped bigly. Time will tell what happens to the fourth largest economy of the world. But in the meantime, markets are watching like hawks, uncertain about what comes next. Fasten your seatbelts and expect more volatility as the situation develops. No question there. And I think Ripple's ready with the XRP ledger because Brianna Madigan, who back in the day was the head of XRP Global Markets and Adoption, said this.
And the last key attribute of a healthy liquid market is really resilience. And that is getting at the ability for a market to recover from a significant systemic event. So if there was some sort of a market shock, the ability for order books to recover from a significant systemic event. And that is getting at the ability for a market to recover from a significant systemic event. So
there you have it right there. Ripple's been preparing for a moment like this. And don't we all understand that you're not going to introduce something without having a crisis to get it done? Never let a good crisis go to waste. Isn't that the adage? Right? Anything new coming into our financial system is going to be ushered in with the invitation of a crisis. You can write that one down. So here we are. Tomorrow is November 22nd when iso20022 goes live, ladies and gentlemen. 11,000 plus banks, 200 countries, 5 to 7 trillion day, moving daily, switches over to iso20022 on Saturday. That means when we come back Monday morning, we're on the rails. The question is how long before they start using digital assets like stable coins, Bitcoin, XRP, and others on the network. I remind everybody of this from Brad Garlinghouse. He said this just a week or so ago. We still don't have global cooperation.
You're demonstrating that we don't have a global consensus about crypto. Even in this conversation, and I agree that it still is early, partly because there is not a global consensus about some of these things.
That's right.
And I think some of the use cases, we're still extremely early in terms of scaled use cases. Circle is certainly one example that has started to have a scaled use case around a stable coin. But I think the crypto industry, I agree, the next 16 years, I think will be better than the last 16 years because you'll finally see applications emerging that up until now have just been the store of value story or speculation.
There you have it. And just a couple weeks ago, Brad Garlinghouse explained things to Tom Lee. Timing is everything. Bitcoin and Ethereum digital asset treasuries are in trouble after a year of relentless promotion. It can't be coincidence that XRP ETFs and digital asset treasuries are rolling out in the crash, almost like a rising phoenix. I think he's got it. And for anybody confused, they're playing three-dimensional chess over here.
Well, XRP, and I sometimes have to remind the world of this, but XRP is at the heart and soul of what Ripple is doing. We care deeply. We have called it our North Star. But at the end of the day, we want to do things that are good for the XRP ecosystem. We want to build trust in XRP. We want to build utility in XRP. And we want to build liquidity in XRP. And each of the acquisitions we do, in one way or another, we believe it will do those things. Now, it may not be, some people may look at it and be like, I don't really, scratch their head a little bit. Well, I promise you that we see in the three-dimensional game of chess, we see how we believe that's going to evolve. Sometimes we'll probably do things that are more obvious and some less obvious. That's okay with us.
Right.
There you have it right there, ladies and gentlemen. Okay, no Freedom Zone today. Taking care of the wife with TLC. I'll catch all of you on the next one.